Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And hello, I am YHatin MOta.
Well, YHatin, what a choppy day it turned out to be for the markets. In fact, traders were clearly feeling the poll heat, given the fact that the Nifty was moving in a 100-point range. YHatin, after 1 o'clock, we saw a good recovery, 22,500 back on the charts, even though we ended above that level. But we did see quite a few bumps in the last hour of trade, where we were flitting between green and red. The volatility index was down 5% at one point of time, but ended above, or in fact, it reclaimed that 24 level. The broader end of the markets were also holding out in the green, but the Sensex as well managed to reclaim that 74,000 level as well. So yes, all in all, the close was pretty okay, but I want to also point out that we started the week on a high, YHatin, hitting that 23,000 mark, but towards the end of the week we saw a lot of those gains being washed out, in fact taken out. So 500-point kind of cut from lifetime highs, and we have ended the week below that 22,600 mark as well. If you look at today's action, realty among the sectors was doing well, and so was metals. IT was a laggard, and most of the other sectors were also in the red, but Nifty Bank Index also managed to hold out. And if you look at some of the movers, YHatin, Adani group of stocks was doing well today, and even Tata Steel made a good comeback, and MLM was also one of the movers, given the fact that we saw a positive report coming in from BOFA, wherein they have given a target above that 3,000 rupee mark, and that's, I think, the first target above 3,000 that the stock has earned. But YHatin, lots of action in the mid and small cap end. Of course, the MSCI additions were fairly active today, and so were the Adani group of stocks.
Yeah, so typical poll volatility, and you do expect this on Monday and Tuesday as well. The market is expected to give 100-200 point swings on either sides, because there are curious numbers of market participants which would like to long or short the markets. So yes, there will be volatility, and there could be some significant amount of momentum on Monday as we prepare for the exit polls as well. And Tuesday morning, 7 a.m. the poll counting starts, and probably by 1 o'clock, 2 o'clock, the trend would be probably clear. That apart, Adani Group stocks clearly showing the momentum, and we have a Jefferies report also which came on the Adani Group performance for Q4 as well as FY24, wherein we saw some significant amount of promoter holding increase, debt levels being reduced, and overall EBITDA or operational performance improving. When it comes to Adani Enterprises, Adani Ports, top gainers on the Nifty, 4-5% gains coming in there. Shriram Finance, Coal India, Tata Steel, although the stocks moving anywhere between 1 to 2%. What did not do well is some IT stocks, TCS down 1%, 2%, LTI Mindtree down 2%, Divi's Laboratories, that stock also continued to languish in trade, 2% down. But what was there to support the market is HDFC Bank, almost 1.5% higher for that stock. Reliance Industries gaining almost 0.4%, so good moves coming in there. When it comes to the broader markets, we had stocks like Bikaji, Adani Total Gas, Policy Bazaar, and that was the MSCI inclusion, one of the top, stocks which got included with an inflow of more than 1,500 crores. That stock was up 9%. Ipca Laboratories and Welspun Corp, on the back of weak results and management commentary, both stocks were down 8% each. Page Industries down 5%, and stocks like NHPC, the other one, because of the MSCI inclusion, was up 6.5% in trade.
All right, of course, those were the movers and shakers in the broader end of the markets. But with that, let's take a look at the stocks that were on our on our radar this afternoon. Starting with IT stocks, I think we mentioned that it was one of the top sectoral laggards today, and you can attribute it to the weakness in the tech stocks in US. Nvidia, shed 3% yesterday after a string of gains, and Salesforce, that particular counter plummeted somewhere around 20% on the back of disappointing guidance for the second quarter. Revenue for the first quarter missed estimates, and guidance for second quarter stands at 8%, which is below the consensus estimates, and the stock clearly reacting to that in after hour trading. And of course, Indian IT stocks will also feel the heat, because some of the companies have built significant capabilities around Salesforce. Persistent, Infosys, these are the companies that have highest employee and revenue exposure to Salesforce. Salesforce guidance of 8 to 9 29% meanwhile compares with a 29% growth in FY20. That's a significant scale down in growth, and the guidance assumes that demand environment is expected to stay unchanged for the rest of the year, and that will come as a setback for the Indian IT firms as well, because we were banking on some bit of recovery in discretionary demand, but that ain't happening, given the fact that we've seen some of the IT firms like Salesforce now giving weak guidance, and the hopes of an early rate cut of course have faded, and now markets are betting on a November rate cut by the Fed. That also, who knows, may not come by, because the Fed has maintained the higher for longer narrative in its recent comments. So aside of that, CLSA has reiterated its cautious stance on the IT sector. Discretionary demand remains under pressure. That's something that CLSA has pointed out. It has reiterated its sell rating on LTI Mindtree as well as Wipro, and even for Infosys, it has an accumulate rating, and Wipro as well, I think there's a sell rating on that. So all in all, things not looking very good for IT space. And even when I speak to experts, Yatin, they said that they will wait it out for a couple of more quarters to see whether IT stocks have really bottomed out and whether or not there's some semblance of recovery coming in the earnings.
Absolutely, and IT stocks clearly languish in trade, and not only Salesforce but Nvidia also was down, bringing global jitters to the American stock markets. When it comes to the overall picture, obviously stocks are in focus on the back of earnings as well as global cues. When it comes to the stock which is on my list, it's Muthoot Finance. Now, Muthoot reported the fourth quarter earnings, which was much above market expectations. Target has been raised by CLSA to a level of 1700. Obviously, the underperform call stays. Obviously, the growth outlook is positive, but CLSA believes that the valuations are expensive. Obviously, the key driver of the earnings beat was strong gold loan growth of nearly 7% quarter on quarter, and we have seen recent action of RBI on gold loan companies, including IIFL Finance, probably working to the advantage of Muthoot Finance. Now, the company has seen a 70 basis points expansion in its margins, which is much better than Manappuram, which is the closest peer. Obviously, the management is optimistic of delivering a 15% gold loan growth in FY25 as well. However, there could be some slight increase in the cost of funds. The shares opened 4.5% higher in trade. However, because of the market volatility, it ended only 1.5% higher last time I checked. But yes, Muthoot Finance, that stock is in focus after strong performance in Q4 as well as in FY24, and the guidance also, Nandita, has been quite good in terms of the overall industry picture for gold loans.
Of course, stock reacting to good set of numbers and good guidance as well coming in from Muthoot Finance. But the other stock on my list, Yatin, is Zomato food delivery app, given the fact that there is a risk of increased competition. We've seen the stock taking it on the chin. In fact, at one point in time it was down 4%. I think it did manage to recoup some of the losses. However, it did end lower in trade. Macquarie has come out with a report wherein it sees a risk of the stock shedding almost 50% from current levels, and that's attributable to heightened competition in the sector. Remember, Reliance Industry is looking to make its mark in the quick commerce segment with JioMart, and it may launch its 30-minute delivery as early as next month. In fact, JioMart is initially expected to provide these services in 8 cities, and then it is going to expand to the top 20 to 30 cities in the first phase. And this comes at a time that when even Flipkart is looking to enter the quick commerce space. So yes, risk of heightened competition, and when it comes to Blinkit, Macquarie has said that it continues to see downside to consensus forecast as well as margins. In the last quarter, in the fourth quarter, we saw good numbers coming in from Zomato. In fact, Blinkit has turned adjusted EBITDA positive. So street was fairly bullish, but this report seems to comes as a rude shock for investors, right? So we'll have to see how really things pan out from here. But want to mention that over the last 1 year, the stock has given 150% returns, Yatin, but in the last 1 month itself, the stock has shed somewhere around 10% or thereabouts. So yes, competition risk remains, and we'll see how this landscape really pans out. Everyone wants to enter into this QSR space, right? So let's see how things really pan out for Zomato.
It's not QSR, it's probably QDR, which is quick delivery space. because the overall matrix is changed with Blinkit and companies like Zepto,
right.
Doing quick commerce, which is delivering goods within 15-20 minutes of orders being placed. There was some lag because markets were expecting that JioMart is lagging, because when you typically place an order on JioMart or probably DMart's online application, the order would come probably next day, and in case of DMart you need to collect from their quick stores
close by,
but I think Jio is changing the dynamics with the war chest of money and probably the backing of Reliance Industries. The street fears that the scale up for JioMart could be much higher, especially when the prices on JioMart are much attractive than on Blinkit or a Zepto or a Swiggy Instamart. They are still value when it comes to the FMCG goods. Yes, the market has sensed some competition, and rightly so, because the stock has already corrected almost 7-8% from the recent highs.
And we as consumers will have more options, and we'll be spoiled for choice when it comes to these apps, right? But with that, those were all the stocks that were on our radar this afternoon. Of course, we are entering into a crucial week, with Monday and Tuesday really determining which way the markets will head. The crucial verdict on 4th June, and of course, we'll be reacting to the exit poll results on Monday. Of course, over the weekend, we will be carrying a lot of action on Moneycontrol, so don't forget to tune in to our website as well as on our YouTube channel and catch all the action related to politics over there. But for now, we are completely timed out, and Yatin and I thank you for joining in and watching our show. But have a great evening, and stay glued to Moneycontrol over the weekend for all the latest on elections. Goodbye and take care. Thanks a lot.